Are you tired of trying to beat the market and failing? The truth is, consistently beating the market isn't about luck. It's about strategy, discipline, and knowing where to focus. Today, I'm going to share investing strategies that have helped smart investors grow wealth over time, even in uncertain markets. First, understand the power of long-term investing. Markets fluctuate daily, and it's easy to panic when prices drop. But history shows that patience pays. For example, if you had invested in the S&P 500 20 years ago and left it untouched, your money would have grown multiple times despite market crashes along the way. The key is consistency, not timing. Next, diversification is your best friend. Don't put all your money in one stock or one sector. Spread your investments across different asset classes, stocks, bonds, ETFs, and even alternative assets like real estate or crypto. For instance, combining growth stocks in technology with stable dividend-paying companies creates a balance between risk and reward. Diversification protects your portfolio from massive losses when one sector underperforms. Another strategy is dollar-cost averaging. This means investing a fixed amount regularly, regardless of market conditions. For example, if you invest $500 every month in an index fund, you buy more shares when prices are low and fewer when prices are high. Over time, this strategy smooths out market volatility and reduces the risk of investing a large amount at the wrong time. Focus on quality companies and strong fundamentals. Look for businesses with growing revenue, strong cash flow, and competitive advantages. Companies like Apple, Microsoft, and Johnson & Johnson have proven to reward patient investors over decades. Avoid chasing short-term hype, hot stock tips, or trending penny stocks. They're risky and often lead to losses. Reinvesting dividends is another powerful strategy. Dividends are cash payments companies give to shareholders. By reinvesting them instead of spending, you let compound interest do the heavy lifting. For example, a $10,000 investment in a dividend-paying stock could grow significantly faster if dividends are reinvested over 10 to 20 years. Small gains add up to massive wealth over time. Periodic portfolio review is critical. Markets change, and so should your strategy. Rebalance your portfolio yearly to ensure no single investment becomes too dominant. For example, if one stock grows and now makes up 50% of your portfolio, sell some shares and reinvest in underweighted assets. This maintains your risk level and keeps your growth consistent. Avoid emotional investing. Fear and greed are the biggest enemies of long-term success. Selling in panic during a downturn or buying impulsively during hype usually destroys wealth. Successful investors follow a plan, stick to their strategy, and don't let emotions dictate decisions. Consider tax-efficient investing as well. Using accounts like IRAs, 401ks, or tax-free investment accounts can save you thousands in taxes over time, keeping more money in your portfolio. For example, long-term capital gains tax rates are often lower than ordinary income taxes, so holding investments for longer periods is smarter. Finally, continue learning and staying informed. Markets evolve every year, new sectors emerge, and economic conditions change. Knowledge allows you to spot opportunities and avoid mistakes. Read financial news, follow experts, and understand market trends. But always make decisions based on research, not rumors. Beating the market isn't about chasing trends, it's about patience, diversification, consistency, and smart decision-making. Start small, stick to these strategies, and over time, your investments can grow far beyond what most people achieve. If you want more investing tips, step-by-step strategies, and market insights, hit the subscribe button now. Comment below which strategy you're going to start using today. And let's build wealth together in 2026.